Our Grosvenor Group owns some of the world's most expensive property, including swathes of Mayfair and Belgravia in central London. But the company, owned by the Duke of Westminster's family, is increasingly developing property assets elsewhere, such as the Liverpool One shopping and leisure complex. Today it reported a 5% fall in underlying full-year profits to £79.2 million. Well, Mark Preston is chief executive and joins him now. Mark, your total return from your UK and Ireland assets was just 0.3% last year, following years and years of double-digit gains. What happened there?
Yes, that's right. 2016's results in the UK were weak, as we thought they would be, anticipating a slowdown in the UK market, in particular in London, in the high-end residential and office sectors. And we, in fact, sold quite a bit in anticipation of that slowdown in order to build up resources for us to invest in the next cycle. But thanks to our diversification internationally, the results overseas were quite a bit better than we'd expected, and then flattered by the depreciation in sterling, meaning that our overall group results in 2016 of 8% were actually pretty much in line with our long-term trend, and quite a bit better than we'd expected. So
yeah, America and Asia picked up the slack where UK fell off.
Exactly so, yeah.
And what about the UK market during the last 12 months? I mean, obviously we've had this big depreciation in the pound. Has that made parts of the UK more attractive to foreign buyers, in your view?
Well, I think there's a yes and no answer to that. Immediately after the referendum last year, really what happened is that as far as the major overseas buyers are concerned, which really principally means North American and Asian, the North Americans, I'm generalising here, but the North Americans came over expecting there to be distress, found there wasn't any distress, clearly weren't attracted enough by a cheaper sterling, and pretty much went home without having really hoovered up much. The Asians, by contrast, had never really shown much concern around the referendum. In conversation with me, some of the bigger investors would regularly say, we believe long-term in the attractiveness of London in particular, the UK more generally, the transparency, the legal system, the depth of the market. Whether you're in or out of the EU, we will continue to invest. And so for them, the cheapness of sterling was, I suppose, a bonus, and certainly encouraged a bit more investment. So it's really a yes and no. For some, yes, and for some, no. Which, by the way, I think underlies one of the great strengths of the London market, which is its enormous range of different players from around the world, which means that at any one time, if one nationality or group has gone cold for some reason, there's nearly always somebody else who's a bit more enthusiastic.
Now, during the last 12 months, obviously Gerald Grosvenor, the 6th Duke of Westminster, your main shareholder, passed away. He's been succeeded by his son. Does that mean any change of direction for the group?
In a word, no. But let me explain. The Duke became a trustee shortly after his father's death. I'll explain a little bit more about that in a moment. He has a keen interest in the business, and we keep him closely involved in what's going on. But he has his own career. He works for a clean energy business, and as a result has a particular interest in the environmental impact of the property group. The property group, Grosvenor Group, is owned by a series of UK trusts. Those trusts have a series of beneficiaries, one of which is the Duke. But as trustees, as all trustees, there's a legal obligation to look to the interests of not only the living but the future beneficiaries, and that enables the business to think in a long-term way. It enables the business to be run for the benefit of the long term. There's a continuity, therefore, of ownership and management that is unique, perhaps, to that sort of structure, and we think very helpful to the way in which we manage our strategy. The beneficiaries of those trusts are UK resident and have been for nearly 1,000 years and will continue to be. And as such, and what is misunderstood and has been incorrectly reported since the 6th Duke's death, is that those UK trusts therefore pay income tax under the UK tax rules. They pay capital gains tax, and they pay inheritance tax by way of a 10-yearly charge of 6%, which is broadly equivalent to, over a lifetime, to the inheritance tax anybody else would pay.